Wonderful good day, ladies and gentlemen. Commodity TV here in Switzerland, in Geneva, in the partnership with Dukas Copy TV today. My name is Jochen Steiger. I'm the chief editor of Commodity TV. And today I'm your host, and I want to do an interview with Dr. Alistair Cowden. He is one of the top copper geologists in Australia, but also he's the managing director of a very successful company called Altona Mining. And we want to talk about copper and the copper markets. Alistair, welcome.
Thank you for having me today, Jochen.
Yeah, thanks for taking the time. Alistair, copper, that's your metal, that's your thing, of course. And can you give us maybe a short idea about copper, what it's used for, and why it's so important in our technical world?
I think everyone knows copper, knows what it looks like. Simplest way to think about copper is the world economy, because copper is used in everything. It's used in your iPhone, your washing machine, the wires that deliver the power to your house, everything. So as the world economy grows, so does the use of copper. It's also used in many things where it's hard to substitute. Everyone knows that copper wires work. No one's going to substitute them and take a risk. So copper is growing, very diverse uses, and is everywhere.
Yeah. That's right. We see a beautiful flower here in the back, and that's not that we are now doing like a botanical geology, but I think it's very interesting because we see a green rock and the flower. What is it? Why is it so important?
Well, this is out in the middle of the bush in Australia, at a place called Cloncurry. And what you see there is a thing, the common name is copper flower. And it only grows where most plants would be poisoned. But this one thrives, and it's got very, very high levels of copper in the soil. And what you see there in the green is actually copper minerals from rocks lying around. So geologists out in the bush in Australia use certain times a year, look for that flower, you find copper.
Wow, amazing. That's how you place the drill then.
A little
Maybe
bit,
in addition.
Some science and some mystery, but yeah.
Definitely. Great. So let's see if this works here. Yeah. There we have a beautiful drill core. Can you maybe explain a little bit? Because now we saw the flower, now we see, well, copper needs to be found first and drilled out, of course. And this is obviously a drill core. Can you explain what the colors mean maybe?
Yeah, this rock here is very beautiful. If you could make it into your top in a kitchen, you'd probably sell lots of it. What it is you see bright red colour, and that's iron oxide. And the iron oxide is very important. Another clue when you're looking for this particular kind of copper, you look for this red rock. Very easy. Most geologists will know what red rock is. The shiny metallic material is copper sulfide mineral. Called chalcopyrite. What we do when we process a rock like this is we smash it up into tiny little bits, into almost a powder, and the processing separates the copper sulfide mineral, chalcopyrite, from the rest. And that concentrated copper sulfide mineral becomes then a concentrate, which is what we sell then to a smelter and refinery, which goes away and makes copper metal.
Okay, I see. Well, it's highly interesting. Now we saw that, what a drill core looks like, how you use it. But I think it's even more important these days to talk about the copper market itself, because we saw prices high, like I think the top was $8,500, $8,800 per ton. Now we are back to $6,500, $6,400, I think. Where do you see the market? We have here a little bit of a market statistic. It shows us surplus and deficit, and maybe do we get another surplus this year? It is an estimate, yes or not. Please elaborate a bit on that from your view as an expert.
I think the thing to first understand is what those two bars mean, demand and supply. So demand, as I said, is everywhere. But one of the flexible things in demand is scrap. So everyone's aware of scrap and scrap metal and where it comes from. The higher the copper price, the more scrap metal comes out. So that influences supply and demand. The other thing that influences copper markets is financing structures. For example, recently one of the reasons the prices is down is that copper was used as collateral in financing in China, and those rules changed, and that had an impact on the copper markets, less being hoarded and more coming out. But fundamentally, demand is, as I said before, driven by the size of the world economy. Supply is much more complex. There's scrap, and then there's mines. And the interesting thing about copper mines is that there are very, very, very large number of them. The big mines are all getting old. The grades, the amount of copper contained in a ton of rock is declining as they age, and they're getting harder and harder to provide new mines and new supply and to meet the growing, continually, steadily growing copper market. On top of all that, one of the reasons why these numbers match, they're very close, or mismatch, simple things like disruptions. We have earthquakes, we have labor strikes, we have
water going into open pits, whatever.
That's right, mines failing, equipment failing, and analysts try and factor in a 5% disruption allowance every year. So the market is quite complex, but in a way it's very simple. It's very tight. Many other commodities are quite finely balanced, and I think you'll find that most consensus forecasts from large mining companies and from the professional forecasters are that the supply will get tighter and tighter and tighter, simply because there aren't any more big new mines of the quality of those that dominate.
Like those Oyu Tolgoi in Mongolia with 400,000 tons a year and things like that.
Oyu Tolgoi is a good example. 400,000 tons of copper a year is what I think a quarter of what Escondida, the world's biggest copper mine, produces. There aren't any more Escondidas. That's what the market needs. The growth in the market each year is about half an Escondida required every year, and mines close. So the copper market, we need to keep finding new things. Mines have a finite life. They don't go forever. Good ones go for a long time. But,
that's right. Yeah. So let's go a little bit more into detail. The International Copper Study Group does every year their estimates, and it's so funny because I remember the last, I think, 5 or 6 years I'm following them. It was always like a surplus, and we ended in a deficit. Yeah, and what we see here, for example, also 2014 was then all of a sudden also a deficit again. Yeah, and so can you comment a little bit for 2015, because we see here potential deficit? Yeah, what is your view on that?
My view is that it's the nature of the forecasting business and being conservative, and they always bias to the side of there being a surplus, because that means they're not then predicting a high price, and if you predict a high price and you're wrong, there's consequences if you're an analyst. So they're always conservative. The things that they get wrong are the estimate of time to bring on new supply. It always takes longer. There's always disruptions, there's always problems, and those mine disruptions that we talk about. And also, it seems to me quite consistent year in, year out, they underestimate demand. And what if you stand back and look at the copper market, quite steadily each year it grows. There's no backwards in copper market.
At what percentage grows?
Generally 2-3% a year. But if you're doing 22 million tons of copper a year or 23 million tons of copper a year, the world market,
nearly 500,000.
It's a lot of tons of copper. Like I said, it's one of these new mines, a whole brand new mine.
Yeah.
So being an analyst is a difficult game. And if you want to stay in it, you're conservative. And I think that's what these numbers reflect. But again, I'll come back, as you move forward, that gap between supply and demand seems to be structural. It's not a function of these short-term market conditions. It's more a function of the lack of new supply. And obviously, the mining industry is going through a difficult time. Investors are very loath, be the banks, be the equity investors, be even the investment guys making a decision in the board of Rio Tinto to expand a mine, to build a new mine. It's very difficult, so people are loath to build new mines at the moment. Hence, in a few years' time, we're going to have a few problems.
Absolutely, so that means higher prices in the future, right?
Yes.
Perfect. Well, Alistair, thank you very much for
that
conclusion, and I think the copper markets stay positive.
I hope so.
Right? Great, thank you very much. Ladies and gentlemen, thank you very much for watching. And well, that was Dr. Alistair Cowden talking about the copper markets. And I think what we can conclude out of this interview, definitely copper is the hot metal, it's the king of the metals, and the demand stays higher than the supply, definitely, and even demand is more rising, the gap is opening, and that means, yeah, probably in the future much higher copper prices. Well, we will see. Thank you very much for watching us. That was Jochen Steiger from Commodity TV, and in conjunction with Dukas Copy TV. Thanks, bye-bye.